Hello traders, welcome to Investoo.com's how-to series and this module called oscillators. In this lesson we're going to review the stochastic oscillator, which was developed by George C. Lane in the late 1950s. When asked about this indicator, George C. Lane said, the stochastic doesn't follow price, it doesn't follow volume or anything like that. It follows the speed or the momentum of price. As a rule, the momentum changes direction before price. So this oscillator is actually very good when trading range-bound markets and breakouts. Now here's the oscillator, and well, this is how the stochastic look like. And you can see that we have two moving average in it, and the blue one, which is the %K, and the red one, which is the %D. The %K is the slowest, moving average, in this case set at 5 periods, and the %D is the fastest moving average, which is set at 3 periods. Now, George C. Lane said that momentum changes direction before price. So when the price is overbought, you are going to see a bullish signal before the price changes, okay? And this is going to give you some great entries when it comes to trading resistance at, of course, overbought levels and support levels at oversold readings. Now, you can see that in this example, we have this level of resistance at these price levels, and we have the signal right here. You can see that the %K crosses below the %D at this spot right here, and of course it has to be at overbought levels, okay? So the stochastic oscillator is at overbought levels. We have the bullish crossover and price is testing this level of resistance. So you can see that before prices changes directions to the downside, we have the actual change in the stochastic oscillator. And you can see it once again right here when we have the actual bearish crossover at overbought levels on the stochastic oscillator before price moves to the downside, to the bottom of this range, which is right here, okay? So you can also see that the same happens when price hits these levels of support. We have the bullish crossover at this spot right here. And when we have the bullish crossover and the oscillator crosses above the 20 level, we have the price movement that follows to these levels of resistance. So you can see that the stochastic oscillator is actually a great tool to trade range-bound markets. Now, the other thing that you need to know about the stochastic oscillator is that you can adjust the K % or the slowest moving average to a 14 period, so it will react smoother to price movements or to momentum movements. When you change the %K to 14 periods, you can see that you have the signals to sell, to buy, and to sell, and then you only have an oscillation towards the next level. This means that if we change it back to a 5 period, you will have a lot more noise within the oscillator. But if you change it to a 14 period like we did before, you will see that you will only get the true setting or the true setups at overbought and oversold, which will have made in this case 180 pips to the downside, to the upside, and to the downside again, which means that by only using support and resistance levels with the oscillator, you would have made 540 pips in 3 trades. Now, if you want to learn more about the stochastic oscillator, you should go to our advanced technical analysis course at Investoo.com/advanced technical analysis.